This week's US CQM Forecast Alert is: why did PCA revise economic growth by more than 1.5%? The PCA forecast has revised the economic growth rate substantially upward as the monthly indicators in the financial market for November differed significantly from the ARIMA forecast. October's monthly economic indicators affecting the expenditure side were close to their ARIMA forecast. Therefore, CQM did little to adjust the economic growth rate on both the expenditure and income sides. All inflation indicators are forming a downward trend. The inflation rate is around 2%. The GDP price deflator has been revised upward by only 0.02%, and the economic growth rate on the income side has been revised downward slightly. The PCA revised the economic growth rate upward by more than 1.5%, from 0.19% to 1.72%. The main reason is that the S&P rose 4.47% in November, significantly exceeding the ARIMA forecast of a 0.09% increase. The S&P 500, one of the indicators constructing a principal component in the PCA forecast, rose 4.47% in November, far exceeding the 0.09% increase predicted by ARIMA. We construct principal component from 15 monthly economic indicators such as the S&P 500, interest rate spread, real money supply, and real retail sales. Then we selected 8 statistically significant principal components to estimate the real GDP growth rate. Conclusion from this week's US CQM Forecast Alert. First, the economic growth rate for 2023 Q4 will be forecasted to be in the range of 0.0% to 1.0% on both the expenditure and income side. Second, the economic growth rate by PCA forecast, which reflects stock prices that soared in November, has been revised upward from 0.19% to 1.72%. Third, financial market may be said to be relatively optimistic about the real economy. This slide contains additional information about this week's detailed CQM forecast and shows how to access the past US CQM forecast alert.